Hi, and welcome to the 2020 Economic Recession and Preparation channel. I'm your host, T. Thank you for joining me on this Monday, December 16th, 2019. Well, it appears that everything is looking good. We got the phase one China trade deal in the works. It appears that everything is looking like things on the upswing. The economy is Stock market is at all-time record highs. Unemployment is as all-time record low. But underneath it all, my friends, we have some very sickly problems with the U.S. economy. And I want to give you 5 reasons why I believe the U.S. economy will collapse into a recession and then to a depression. For those people who are still in La La Land, who thinks that everything is okay because they have a few shares of Amazon, maybe they have a few oil stocks, maybe they are living the good life. But for the rest of us, here are 5 reasons why the U.S. economy is not going to recover as fast as it did in 2008 when it almost collapsed. Now, you have to remember, in 2008, we had a $787 billion stimulus, quote unquote, package passed by Obama for the banks. Okay, that wasn't for Main Street. That wasn't for Main Street. That was for the banks. Once again, the Troubled Asset Relief Program, the TARP program, they approved basically a $787 billion loan for the banks. Okay. Now, what are we seeing here today? We're seeing the Federal Reserve pour in over $400 billion to date into the repo market for, guess who? Once again, the banks. So what is going to cause this next economic recession and leading into a depression basically for the next 10 years, 5 to 10 years, is going to be over-leveraged companies around the world, over-leveraged banks and over-leveraged companies, okay? So when the United States can't afford to meet their debt interest payments, okay, they default on that. That's going to trigger a worldwide recession and or depression, okay? We already see Europe's banks like Deutsche Bank struggling to meet that quota as they're on the brink of claiming bankruptcy as we speak now, okay? The nation's trucking industry, just 2 days ago, the nation's trucking industry, Caledonia, laid off 5,000 workers and filed for bankruptcy, okay? So things are not as good as they appear. Now, the first reason that I want to point to you why the U.S. economy is heading toward a collapse and a recession is that the United States debt load is too high compared to their GDP ratio. United States is $23 trillion in debt, okay? When you print paper money and you have $23 trillion in debt, and the debt is growing every single year, you cannot afford to get out of that situation, because that leads to either one of two things, okay? Hyperinflation eventually in the long run, but it leads to a devaluing of your currency. Because the U.S. currency is so far devalued and so far debased, okay, and the people that have money, the top 1% of 1%, are not spending money. They tend to hoard the cash and not put it back into the economy so that it can grow. There's only so much cash dollars that's out in the economy, okay? It's called the money supply. So when that happens, the rich are hoarding their money. They're safeguarding it because they know that the collapse is coming. The rest of us are struggling to try to find cash and find dollars by cutting back here, cutting back there. That leads to a liquidity problem, okay, a cash liquidity problem. And that can happen with banks, that can happen with consumers, and everybody's in the pinch for money. Now, when that happens, that leads to a deflationary recession, and that's just when prices drop and fall, but nobody has money to spend anything because there's not much cash circulating out there. And there you go. We're into a depression, okay? Number 2, the U.S. dollar is going to experience a slow decline rather than an overnight collapse, okay? And this decline is going to happen in the next 12 to 18 months. And then from there, once we officially enter into a recession or depression, it's going to be long lasting. So we're talking 5 years or more for this next collapse, okay? And what's going to happen is that the dollar instead of, and it's not going to lose its status as the world reserve currency because it's circulating, so much circulating, and people have a lot of the super rich people have traded their money obviously in other currencies such as the Swiss franc and all these other places, offshore tax havens that they have their money in, just in case they can exchange it, for the dollar when it does come back as a safe haven. But that's going to lead to a collapse because everybody's going to panic and run to the banks to take their money out, and the banks are going to go under. Only one or two banks are going to remain, one to five banks are going to remain the strongest, and the rest are going to go under because they're not going to have the cash to meet the consumer demand when people realize that all of the things have been bamboozled. The stocks are not worth anything. The bonds, treasuries are not going to be paid back in 50 or 40 years or whatever the case may be. Okay? The next reason, number 3, the Fed's quantitative easing program, and the low Fed funds rate is going to cause such a deflation of the supply of money that it's going to create a stagflation, meaning that they're going to be printing up money and printing up all this money, but people not going to be able to, it's not going to reach the main street, the people on the ground. It is going to reach them, but they're not going to be able to do anything with it because the prices by that time are going to be going up. And people won't be able to afford the basic goods. A loaf of bread may cost $100 or whatever, $50 to $100. But they won't have the money. They won't have the money to purchase it because it's a liquidity trap. Okay, so by then it will turn into hyperinflation the longer it goes on because it'll start as deflation for the first 2 to 3 years. After that, hyperinflation sets in because the money circulating. There's not enough money circulating, and the prices are going to go up because there's not enough goods and services to meet the demand, of the people, wherever that is. Now, the same thing that happened back in 2008. We had stock market hit new highs. Stock prices are based on corporate earnings, so they consider that a sign of business prosperity. Although I may mention that this is a caveat. You do know that half of these tech companies that you see on TV that are like WeWork, and Uber and Lyft and all of the other tech companies are not profitable, meaning they don't make a profit, but they're burning through investor money like crazy. We're talking billions of dollars or millions and billions of dollars a year, Consumer confidence drives 70% of the economy, and this is the fourth reason, Consumer confidence hit an 18-year high in the year 2018. Consumer spending drives 70% of the economy. So consumer spending is already on the way down. As I mentioned in my previous videos, retail sales have been dropping for the last 4 or 5 months. Manufacturing, the PMI, the manufacturing index, has dropped below 50 for the 5th straight month. So if 2/3 of the U.S. economy is consumer spending based, you do the math. When consumers stop spending, the U.S. economy goes down. And that's what's going to happen in 2020. Consumers are going to be tightening their belts. They're going to be worried about keeping their houses, the land, whatever physical assets they have, gold, silver, cryptos, land. They're going to be worried about keeping that and tying up loose ends. They're not going to be spending extra money taking trips or discretionary spending, buying new tablets or tractors or whatever. That's going to be the fourth reason. And the fifth reason, economic growth around the world is slowing. We're at a stagnation coming up this next year. Real GDP is at 1.8% as I speak right now in the month of December and falling. GDP next year is in danger of hitting that 0% mark along with your interest rates that the Federal Reserve is trying to get to 0% right now next year. GDP has not been more than 3% or 4% growth since 2005. Isn't that crazy? So, after a boom, a bust always occurs. Remember that. That's part of the natural business cycle that you've learned in school and all of that. So, after a boom, a bust has only occurred. We're in the 11th year, going into the 11th year of the economic expansion, so-called expansion, which is really just a printing of paper over, President Obama added to the debt to get us out of recession and not send us into collapse in 2008, but that's it. There's no more stimulus packages coming from Congress. As you can see, the Republicans and Democrats, they can't even agree over what they're doing right now with this impeachment fiasco, So we're not getting another stimulus package for Main Street. Main Street is not getting one. The banks are not getting one, but they can just print up money, this phony, funny money to help save them. Most of the banks. Some of the banks will go under in this next one. this next crash. Okay, so this what it means for you. Try to stock up on canned goods and food. Food will be absolutely like gold in this next coming collapse, because remember, 70% of U.S. food, whether you get it from Costco, Sam's, Walmart, Target, or any of the other stores, Kroger's, or any other stores that you use, comes from overseas. Mexico, Canada, Philippines, South America, Brazil, Costa Rica, Honduras, whatever. That food is not coming from your Midwest or California as much as you think. 70% of your food comes from overseas. Stock up on canned goods. Stock up on 20-year mountain food that you can order on Amazon, okay? That's lasts for years, okay? Stock up on 20-pound, 50-pound bags of rice, okay? Water. Get water filtration systems. If you're into silver and gold, buy some of that. But I wouldn't put all of my money in silver and gold. I need tangible assets right now to use in the immediate short term for when this collapse really gets going. Iceland's economy collapsed in 2008 as banks defaulted on $62 billion of foreign debt. Okay, remember that. Iceland went under in the European Union. Greece, I don't know if you remember that. Greece went under. They had a terrible recession. Turkey, right now, their economies, the Turkish lira, look it up. The Turkish lira is under collapse and under pressure right now. Okay. We've already said Venezuela. We've already seen what's happened down there. And not just Venezuela, mind you. Bolivia is having problems down in South America with their currency. La Paz in Bolivia, the people are rioting. They're having all kind of violence down there. Hong Kong, we still have their violence going on as in Japan. And China, okay? So these 5 things is why the U.S. economy will collapse. It will have a recession. This is going to be a longer recession. We're talking about a 5-year or more type of deal when it gets going next year. So regardless of the election, this is coming up to United States of America. It's on its doorstep, and it's coming up this coming year. So it's no need to panic. It's just need to get to prepare, because we know that things are going to be going down. They're not going to tell you this on the mainstream media because they don't want panic. They don't want people panicking, taking all their money out the bank and doing whatever with it, okay? The job of government, remember that, is to keep order and control. That's all it is, okay? So you're not going to hear this on CNBC. You're not going to hear this on MSNBC, Fox, CNN. They're not going to tell you that because they don't want panic until the right time. Everybody's gotten to basically all of the super rich 1% who owns all this stuff gets their stuff secured, and then they can let it all go to crap, okay? But we're smarter than that, okay? We as Americans, we grew up with smarter than that. We can prepare. So get prepared now, and because remember, once this collapse happens, unemployment rate's going to go from where it's at now, that little 3% that they're telling you on TV, that's going to go up to about 20%, 25%, and even higher in some of these inner cities and for minorities. Unemployment rate's going to be even double that, 35%, 40%, because with the use of automation and AI coming in, replacing the jobs, the little jobs that we do have, that leads everybody else into even a lower paying job, okay? And that's what's going to turn this next long recession into a depression. And we probably won't get out of this thing until about 2030, okay? And that's when a New Deal or Green Deal, or whatever the Democrats are talking about now, is going to come into effect. But our infrastructure will be so badly damaged by this next recession, it's going to be crazy. Something that we've never seen before. But anyway, I'm glad you're able to join me today. I will continue to keep you informed. Stay safe, get prepared, and violence is going to increase too. So you want to continue to stay safe, training, get yourself in the best physical, mental, spiritual shape you can be in, and you'll be okay. So thank you for joining me, and I look forward to seeing you in the next video. Bye-bye.